Hello and welcome. And today is that of the 13th of June 2018. I was in Theta before and I got out of Theta. Probably going to try to get back in again. I'm going to give you a price objective. I'll calculate it very shortly. I got out of it because I was trying to really get out of exchanges and, well, HUOBI, however that's pronounced. First impression's not good with them, so I decided to, not trade it anymore. I got out for small profits. And thus, I'm looking at it now. It's on the Binance exchange, and I'm playing around with them right now a little bit, so I want to see if I can build up a nice little Binance account, but a lot of it is working on if Bitcoin is going to make this hedge move, or make the hedge down move to 3,000, which would of course give me a decent amount of coins available, because that's where I'd be wanting to buy a lot of cryptos. Of course, I'm going to scale in with small buys here and there. Will this be one of them? And I'm thinking maybe. When it got onto Binance, notice the original move, as on its first day it got down as low as 2352, but the next day it got up to its all-time high of 4,048 Satoshi. So it did well better than a 50% gain, but not even close to a 100% move from its lowest to highest point. It's pretty much now back down to that level, probably going to even be going lower than that again. So this is the daily term time frame, as it's just a few days or a couple weeks now of being on this exchange. 400-minute time frame, I get a little bit more data. I can see within this on the 18 average. Obviously this thing would have been rising. And one of the things I'd like to talk about from the highs, and this is very common, you have the massive move up, and that's what a massive move up obviously should look like in many different ways, but it's all about the same. You have a good correction through price afterwards. So here's that good correction. And then you're going to get that lower high rally attempt, and it's going to be a good rally. And you go from 3,000 up to 37. That's over a 20% move, so lots of great day trading opportunities. And you get that lower high. That's a very common situation when you get to what becomes that after the fact a key top. So within this 18 average on the 400, there's your sideways move. Within it, thereafter it had this failed attempt, which was very noticeable in here that was the case. So there's your situation in here, coming down to the 18 lows, 3 periods just saying, oh my goodness, this is looking weak, and then thereafter. And its rally attempt here, which of course has obviously failed. It is broken down below this level of support, which is going to make this very easy to calculate, especially if the mathematics work out, and they do. But to see things a little bit more clearly, let's just take a look at this now to a 3-hour. And let's talk about Fibonacci downside. High. What we're looking at is a price correction going up. I'm looking at the lowest price and the price it goes up to. So high, which is 3745 rather. We can see the number on the top of the screen where the open, high, low, close data is. So 3475, and the bottom was 3005. That puts a down target to the 2,623 Satoshi number. What happened at 2623? Well, it was pretty good support. Close enough. Barely microscopically above that line. Now all it gave was one opportunity to get some sales, and that was about all you had for the trade. I guess you could count this as the lower high rally before the fall, which I can take a look at more clearly, say on the 15. Well, it's either this one here, which was technically a higher high, the rare one, or either way. Either way, the market had its support where it was supposed to, had a very good rally, did its job as you hope or expect that the Fibonacci mathematics is going to do, and that it's going to play out in that key level. Of course, one of them is that it just keeps falling to the next one, but that's not what happened. One of them is doing what you hope to happen is what did go through, is that it finds support there. Sometimes you have to wait a while. Look at how often this is support. You supported this once on this for whatever rally, comes back, supports it again, comes back up here, comes back again. The more often time support is tested, the more likely it is taken out. But not always is that the case, which is important to note as we are at the $6,000 Bitcoin prices. And I mentioned that this morning with the silver comparison to how often $4 was tested back in the 1980s through into the 90s and so on. So therefore, what we're going to do is we're going to do the same Fibonacci calculation again, because I need the downtrend to happen and have the lower high rally. So if you go back to say a 60-minute time frame, we got a low in here at 25.84 and a high at 31.30, which gives me a down target of 22.95, and I'm expecting a small pierce below, but as shown before, it wasn't that much of a small pierce the last time. So for myself, what that's going to mean now is that when the market comes down here, I'm going to need to take some US Tether that I have on Binance and either turn it into Bitcoin or the BNB coin, depending on, of course, which is a better buy. Theta against Bitcoin. And I guess I could even buy Ethereum. I would have to look at the time, which is the best buy. And this is something, and maybe there's a website that could do this easy for you, where you put a price of a certain coin, and it automatically gives you all the prices against things like Ethereum and such. Because when it comes down to it, what I often have to do is find the ratio of base currencies. So for example, with say Ethereum, I would bring up my calculator. I would put in the price in it, which is 728. That's good enough. And push the 1x. Now I know the ratio is 13.73. And then whatever the price is against Bitcoin is what I'd multiply it by. So say we're talking about the Theta situation at the 22.95, and let's just say it's time to buy and I can get, say, 22.80 as the price on the Bitcoin exchange. If this happened to be the ratio, I would say, okay then, well that means the price against Ethereum is 31.3. Now I would know the ratio I would pick is whatever I have to spend to get Ethereum on Binance, which is pretty much the same everywhere. And then I would look, okay, well, if it's going to cost me, say, 30,500 to buy it against Ether, well, then it's a better situation for me to turn the Tether into Ethereum and then into, say, Theta. And then, of course, the same would be true with a Binance coin. I would do the 1x on its price as well. And within the Ethereum chart, as we're looking at it, we're seeing the similarities of a cup and handle double top type of formation. Bottom line is you have a key high, you have a price correction, you have basically the lower high rally, and you're breaking down. So you're going to talk about filling some of this empty space. So we're probably looking at going back down to the 63 number-ish. I'd be looking at a 61.8% down. That's just a quick first place between this high and this low based on the setup, because you see a situation, at least I do in here, that says, okay, here this is leaving this 18, which when you look at Bitcoin had the very similar, I'm going to bring that chart up next, where it had a down move, come up to the 18 and then spend about a little over a week, which was in the daily chart, I guess, but 7, 8, so whatever, a decent amount of sessions just within the 18 average. Yeah, right in here with Bitcoin. Same thing, same time frame daily. And of course, falling through, you can see decent size move for it. 63.91 now, which means it's just had a decent size move. And when you look at investing and cycles, see, depending on one's financial situation, of course, how they're trading and everything, it makes the game plan different for everybody. Because when I just look back at the past and see what would it be like if you were trying to get into Bitcoin for the first time. Because back in here, I was amazed by this rally. I was not a believer of Bitcoin by no means. But if you were to ask me on a chart level, hey, do I buy here at 540? Is it a decent sized buy? I'd say, okay, you're say right here. You are overextended a little bit. But you had a big level of resistance between 464 and 500. You're $70 higher. That's not much, 12%. If it's not late now, it could be really soon. But it wouldn't surprise me if it went higher. I do think there's an okay chance you might get a pullback to 520 down to 470. That'd be an interesting spot to buy as well. But you can see, no, it didn't come back to it. It just had a decent move. I guess 470, it did come back here. But if you were able to get in, and even if you were to say buy the break and just take the hits, if you will. For you buy here and you just take this hit. Okay, so be it. That was easy. Of course, you can go like far, far, far back about, say, buying up here when it was like 1,000 and just holding on the whole way through. And there's probably some people that did. And today, they're going through another wave lower, but they're still up over 6 times against the dollar from when they started. If they bought in 2014 at 1,000 and they're still holding on today. But by getting in here at any of these times, a lot of it worked out. And there was the start of a big, big gain. Myself, of course, I got in at this point, but anyone who got in at these levels here was at the point where they were able to obviously profitate the move that came in. If you were on the fence here, like, oh my goodness, this is up so much, there was your opportunity. If you missed it, as we're in the spot again, it becomes very difficult, even at 4,500 at this stage, to become buyers into something. Unless, of course, you buy small with intentions of buying lower. See, if you came in here with intentions of buying lower at 46, then maybe you got some, or maybe you came close at least to getting a buy order back in here. But when you're looking at these up moves, it's always going to be the same, whether it was back at 3,900, whether it was at 6,600 on the way up, whether it was at 10,008, and everything up to the near high at 20,000. Buying at these levels is just madness. You can see here how madness, I mean, it's way, way overextended in 11.6. So those who said, you know what, this is up too high, I'm going to take a calculated gamble, I'm going to sell all my Bitcoin here at 11.6 and try to buy it back at a significantly cheaper price. This is where being wrong and being right at the same time can come into play. Because yeah, okay, you could have sold all 11.6 and you could have sold it all at 17,000 or 19,000 as well. But now you have the opportunity to buy some back. And maybe you're still waiting to try to get, again, maybe that 3,000 number I'm talking about. Or being safe and get 4,000. Or in case it's going to be a failed breakdown, maybe like, you know what, I'm just going to buy at 5,000. And if it goes to 3, I'm just going to take the hit. But I want to make sure that if it's going to be the failed breakdown, fast move higher, at least I'm going to get in. And what I'm talking about here is, if you've been watching my channel, I've been talking about this quite some time, that in a pattern like this, because if the market's going to break down below, then it's going to have a significant move. But I've seen so many times where you get like a failed move, a scared move, where the situation says it's going to go much deeper after breaking a significant level. Hence why when the market is barely lower, say 5,200 or such, that's when you get a lot of people having stops in place. A lot of people shorting the market, selling Bitcoin in that sense because they realize this is happening. I wanted to wait for confirmation of a 3,000 move before I was going to play. I didn't want to do any of that stuff back when it was like 8,000 or 10,000 or whenever. I guess for myself, I guess it was starting at around 8,000 for me. But I want confirmation here. And those are the ones that get trapped the worst, because when you see something like this and it bottoms just a little bit below, which is not enough for a significant leg lower, and that's all it goes to, it spends little time from the point where it broke key support to the point where it finds its bottom, just a noticeable leg lower, but not a great leg lower, a quick recovery point thereafter, getting past and above where the breakout situation was, thus getting back to an area for which it came from. In this case, we would be saying its lower end of where it came from is in this circled area. Doing that really quickly is the signs of that failed breakdown. So I'm going to be looking for a situation like that. But if you're wanting to have a possible buy-in, I do have one buy order in at 5,000 just in case. And at that stage, I'd probably, considering I think it's on Cryptopia, I'd probably buy XBY with it after it's went through, thus getting altcoins for cheaper this way. Now, as far as how I would want the market to play, and the market's not going to do what I want, it sure as heck isn't going to be listening to me now and saying, hey guys, this is what Derek wants. See what? No, not even close, not even maybe. What I would want to see happen is for this to do something like this. Maybe before the July ends, maybe. Go to 3,000. Spend approximately, we'll say 24 hours or less below 4,000 after it hits 3. At this stage, when these buy orders get executed, I will be what they call the busy beaver, or I'll be buying this, buying that, buying this, buying that. I'll be buying a lot of different altcoins. I'm going to expect a lot of them to go down in prices as well. So do a lot of portfolio work and adjustment, which is again why I want 24 hours of the price under 4,000. But I realize that when the altcoins, when everything goes up again, I think Bitcoin is going to be the leader in the sense, because when everything goes down, I look at it as in you sell your altcoins to accumulate Bitcoin to then sell Bitcoin on the market to get fiat. And then you get fiat to buy Bitcoin, so that you have to buy Bitcoin first. Then you take your Bitcoin and you buy altcoins. At least that's what I'm hoping. So then at that stage, what I'd want to see happen is, say, Bitcoin over the next few weeks to show that failed move, fast move setup on the more longer term time frame. And maybe have a quick move back up to this stage here. Now, around this point here, what I would probably notice is that my altcoins are doing very well at this stage. I'm going to have to sell a bunch here and there. I'm going to probably have to buy a couple 100 ounces of silver or something just to equate for the gains that I've been getting. Yeah, maybe 100 ounces or 80. It's not the greatest of sell times, but it's going to be finally the time where I can buy silver, because the only way I'm going to buy it again next is if something like this happens, or I'm able to get some good profit in trades and then do something like that, or if the market just goes back up over 10,000. That's right now the only way I can end up buying some physical silver with Bitcoin at this time. So that would be ideal, and then maybe just some little bit of volatility before it gets to something like that. So ideally for me, that's what I would like to see happen. And then just have a nice little like higher after this, and then a nice large price correction again, and just keep on scaring people out. But generally speaking, when markets go higher, yes, they call on the way up, it's like greed, I guess, and the euphoria, all that type of situation, and that's when you're supposed to sell. When markets are way higher, that's when you sell. So that's why with altcoins, they go up, I'm going to sell it against the base. This goes up, I'm going to sell Bitcoin more and use it as real money more often. Buy precious metals, do all that kind of stuff. And then when markets go down, everyone is talking about panicking and fear. So I look at the opposite. If you're going to sell, I'm going to be looking to buy. So I'm buying small right now at this time frame into alternate coins because they are going down a little bit more against Bitcoin. But the plan is obviously going to be accumulating a lot more of the altcoins. And then with Binance, again, I probably want to accumulate 4, 5, 6, 7 different coins and just swing trade them back and forth at that stage. That's looking like the plan for what I'm going to be looking to do. Now, if I was to be looking to get into cryptos, I would see something like this, and if I had nothing at all, I would say, okay, there's a chance that this thing could go higher, and if it does, the next leg, as I've shown with the potential for, is big. Once it breaks this resistance, it's already had enough of a correction to qualify for its name of that of a correction. But it does have that bearish sentiment. Now, if you were, say, 100% committed into wanting to get into cryptos, but you do not like this bearish setup, then that means having strategies ready. Okay, if it comes down to a certain level, I'm going to enter in. Or if you want to say you're just going to get in anyway, one strategy is, this is what I'll do. I'll buy Bitcoin now, even though I want to short it or I don't want to play it. Once I get the Bitcoin, I'm going to put it on the exchange and take the chance that the exchange isn't going to screw me over. Of course, you can identify your account with almost every one of the top exchanges and do all that stuff for security if that's what you wish. Of course, everything's within your own risk and reward, and that's why I like to say that all the time. Risk-reward management job number 1. But you'd have something like the US, like a Tether or a true US dollar coin, and then put it into US dollars that way, realizing that when the market gets there, and you can have buy orders ready so that it can happen. Like this thing could happen in 8 hours from now. It can happen in 8 days. It can happen in 8 weeks. A price correction to 3,000, and all 3 of those time frames make sense. Although 8 hours, that might be pushing it a little bit. 28 hours might not be quite as much. That's a little over a day. Definitely 38 or 48 hours, a couple days. But what I'm trying to get at, you're at a stage in this market where after you have the moves that it is showing, and it's at the lower end of this range, that on the breakout of a key support, you're talking about noticeable size, high volatile moves, which is why when it breaks this point, it could very easily happen so fast. After all, when it came from 6,000, half of that back was from here. It lost half its value from here to here. So that was a few weeks, like 3. But even if it happens in like a month, which would make more sense, then you'd be your buy order would be in, and then you just leave it there. Now, the reason why you would leave it into an exchange like that is because the alternate is waiting for a market to revert over. That means you need to see a situation where it's able to get above this 18, And this can be a scary thing to try to do. And get a pattern for it to go long. So get above the 18, pull back, establish some sort of level of resistance above it, and then wait for it to slightly get above it. But that can be very expensive, and it can just, when it's ready to go, these things can just fly higher. Which is why oftentimes I'd be like, you know what, maybe buy a little bit, maybe if I were to start off for fresh, that is, maybe I buy a decent, I buy a bit of Bitcoin, buy some in US dollar Tether, buy this alt, buy that alt, start trading there, but just have a lot of orders ready to buy both altcoins, thus holding Bitcoin, and tethers, or the true US dollar, thus trying to get more Bitcoin, realizing that I don't want to buy much now. I want to wait for the lower prices, if of course that's where you think you're going to be at. Now anyone, again, like if you're thinking this in here, if you bought in here, that means you should have been ready to buy back again in here. Which means, again, if you're playing the game in here. Now, if there's ever any good fundamental reasons for why this is game over, then it's probably going to be a good idea to understand it. But I don't see anything right now why, if you've got a diversified situation and you have risk rewards set up, that if you can put enough in that you can take the risk and just let it happen, in the sense that if it goes to 3,000, I buy. With what I'm paying, can I handle the risks? Because that's always what the gambling game comes down to in life. And then if it comes down to 1,000, can I have more funds allocated to buy a bit more? To me, that would be the last buy level. Because if it doesn't hold above 1,000, that to me is the indicator on a technical analysis that it's going to fail, if it's unable to hold that point. And I'm just rambling on right now, which is why I want to end this video, so I'm probably going to try to do such in here. But I'm also trying to figure out or just explain the market dynamics on the situation of buying at these key levels, because to me it's always about, when you have good leg higher, you sell, key leg lowers, you buy, but understanding where they come into play and how you're going to allocate your investments. So on the way down, how you're going to handle your fiat currencies, how you're actually going to buy the cryptocurrencies, and on the way up, how you're going to sell them, and then how you're going to how you're going to allocate the new funds you sell, and all that type of stuff. So having plans in order for moves lower and moves higher is basically where I'm trying to go on this point. And I'm rambling. Time to end this video. Thank you for tuning in. Bye-bye.